Now, the Securities and Exchange Board of India, SEBI, wants to protect small investors who put their money, often significant chunks of their retirement corpus, into debt mutual funds. As a part of this endeavor, the capital markets regulator has introduced a swing pricing mechanism in open-ended debt mutual funds. Swing pricing is a mechanism by which redemption costs are apportioned among those unit holders whose trades impacted the NAV. The mechanism is designed in such a way that the remaining unit holders don't have to bear all the costs of the redemptions made by a select few. In a situation where there is a liquidity crunch, the swing mechanism effectively ensures that those redeeming their monies are charged for the redemptions, thereby seeking to dissuade them from doing so. Often, due to low liquidity, fund houses have to sell their investments to meet redemption demand. This leads to a fall in the NAV of the fund. So, no better than Joydeep joining us today. Joydeep Sen is the corporate trainer and author, joining us today to explain this complicated topic in a simpler manner. Joydeep, thank you so much for joining us today. Always a pleasure speaking with you. So, first up, if what I said about swing pricing, how do you put that in an illustration so that it's very easy for our viewers to understand that as well? What does this exactly do?
Sure. Just to recall a known concept, that of exit load. Exit load is defined, like if a fund says 1% for 1 year, it is defined for that period of 1 year. Now coming to swing pricing, there are certain terms or conditions when that swing pricing comes into play or it does not come into play. Like you said, full swing and partial swing. So full swing is a market-wide situation which is triggered by SEBI. It could be a market-wide aberration, dislocation, or a liquidity crunch kind of thing, which you referred to. And a partial swing is a kind of specific to a particular AMC or a particular fund. They may be facing a run on the fund and that kind of thing. Now coming to the question as to illustration, because that will help explain the concept for viewers and how does this work. There's a fund, let's say a credit risk fund with a corpus size of rupees 1,000 crore and an NAV of rupees 15 as an example. And let's say the terms mention that this fund can trigger or will trigger partial swing. And the definition of partial swing is redemption of 10% of the fund. And that extent of swing, partial swing, is 0.5% of NAV. So how would it work? If it so happens on a fine morning or not so fine morning, the fund faces a redemption of rupees 110 crore. So just to recall, fund size 1,000 crore, 110 crore, more than 10% of the corpus size. So that redemption happens and that partial swing is triggered. And the partial swing is 0.5% of the NAV, which means those who are exiting, they will get an NAV of rupees 15 minus 0.5%. 14.92 is the NAV they will receive. So what's happening here is, out of that 110 crore rupees which is being redeemed, rupees 55 lakh, which is that, that 0.08 into that number of units, rupees 55 lakh is being taken from the exiting investors, and it goes to the fund, which means it goes to the existing or remaining investors. So it's a kind of equity or fairness. Those who are like fair weather, those who are exiting, they are giving it back to the fund. Now coming to full swing, as an example, let us say there's a market-wide dislocation and SEBI triggers full swing of say 1%. So 1% of 15 rupees is like 15 paisa. So those who exit, they get 15 minus 1%, which is 14.85 rupees. So 1.1 crore is the quantum which will be deducted from the exiting investors, and it goes back to the fund as an equity or a fairness to the existing or remaining investors. So that's how broadly it works.
Okay, all right. So that was a very helpful example as well, Joydeep. So this basically is done in order to ensure that the remaining investors do not get impacted by the fall in NAV. And it usually happens when there is 10% or more redemption at the time, or there's a different limit for different cases.
Okay, two things here. Like you said, different limits for different cases. There is something called partial swing, which is kind of not compulsory for the AMCs. There is an AMFI guideline. If AMCs want, they can implement it, and they have to have it in the SID. Not like, they feel like doing it. No, not like that. They have to have it in the SID. So whatever terms are there in the SID, if that is triggered, the AMC triggers that. But these terms can vary from AMC to AMC. And what you refer to as fall in the NAV, I would put it slightly differently. Not exactly a fall in the NAV, but it's like, just to recall what happened in March, April 2020. One AMC shut down certain funds due to a liquidity crunch. Those who exited earlier, let's say sometime in March or April, the AMC sold papers which they could sell. Let's say as an example, AAA. Those who remained, they remained with a portfolio which is like AA or single A, which is not as good as when it was when the redemptions started. So it is like those who are exiting, they're kind of taking the cream with them, those who are remaining, they have a relatively inferior portfolio. So that is the fairness I'm talking about. NAV swing can happen any which day. It's like the portfolio quality which remains with the existing investors.
Okay, all right. So I take that point. It's partial versus full swing is different, and it also depends from AMC. And the example that you gave of what happened during COVID is very important as well. So that means it's good for the existing investors. They are paid for being there with the fund at that particular time. But are there any limitations of swing pricing as well? Something that it does not consider and is something which could be negative?
I won't say negative per se, but limitations are there. One limitation is, like I'm saying, this equity or fairness. How do you measure or how do you quantify? Whatever number we discuss, like 0.5% or like 1% we mentioned, if it is like 0.5%, it is only an estimate or guesstimate as to what could be the impact. As an example, fair weather investors are exiting, those who are remaining, that may lead to a fire sale. It's difficult to quantify a fire sale. And secondly, as I mentioned earlier, partial swing is kind of not compulsory with AMCs, and the terms may vary. Somebody may say 0.5%, somebody may say 0.2 or 0.3%. Of course, depending on the AMFI guideline, the AMFI is defined as per that PRC framework. Some AMC may not even have it. So these two are the kind of limitations of this concept of swing pricing.
Okay, all right. So just limitations. There's nothing really negative about swing pricing as a concept here. Now we spoke about how it helps the remaining investors as well. What are the other ways when swing pricing helps investors? And do we see that happen a lot, like in debt mutual funds? I just want to understand, because COVID-like events do not happen so often. But when they do, is this something which helps the investors completely?
So on the frequency of happening, I would say ideally it should never happen. Okay, it has happened earlier. Like to recall, July 13, 11 years ago, market was tight. March, April 20, there was liquidity pressure. But why I'm saying ideally it should never happen, now there is a mechanism in place. There is a fund of 30,000 crore in the AIF format given to a particular large house, a leading house of India. What that fund will do is, in case of a liquidity crunch or a redemption pressure in industry-wide, they will buy these not-so-liquid papers from the mutual fund industry, and mutual funds are contributing to the corpus. What it means is there is better stability than earlier, and hopefully, ideally, we should never have to resort to that kind of situation. To the other question as to how it helps, so as and when, if in case it leads to fire sales, that compensation they have already received from the investors who exited earlier.
Okay, all right, get that point. So last question before we let go of this interesting and very useful discussion, Joydeep. Is it largely for debt funds only in India and everywhere? Does it help equity funds at all? Or you think this is something that just suits debt funds for now?
So conceptually and currently, as per regulations, it is for debt funds only. But since you raised this interesting topic, we can debate this. Equity, so equity, we have large cap funds, we have small cap funds. Large cap funds have enough and more liquidity. But in small cap funds, depending on how small the particular fund is, how liquid the counter is. So small cap definition, as you know, as per SEBI, is 251 and onwards. If the cap is like 100 or 2,000 or 4,000 whatever, depending on the size of the small cap stock and the liquidity of the particular small cap fund, we can debate this. There may be a case for small cap funds also, in case there's a redemption run on a particular small cap fund. Those who are remaining, they may be left with illiquid stocks in the portfolio, which is conceptually similar to the debt fund swing pricing.
Okay, all right. So right now with debt funds only, but as you said, it's a debate and we'll have a longer discussion on this someday, Joydeep. But thank you so much for joining us today and explaining that tricky concept to us, and hope it helps the viewers as well. With that, we'll take your leave on this show right now. But we'll do one thing, we'll take a quick break, and on the other side, we'll talk about cash holding in mutual funds, analyze that portion with Nirav R. Karkera of Wisdom. Stay tuned for that conversation.
Toothbrushes, toothpastes, and other oral health aids is much less than in the urban areas. But awareness, and as Sunil said, awareness and knowledge has to be imparted so that people will be more, able to do what they have to do.
It's a lot of work, but it's been fun to understand what's going on, especially with AI. But I'll talk to you about that in just a second. You know, this is really the mother market for you, Amit, and you've been here over the last few years running the North American business. What's the sense that you get in terms of business confidence, in terms of a return of discretionary spending capacity, discretionary spending power? Is it looking any different today from the last time that you spoke at the end of the quarter?
I think the overall confidence is quite robust, I would say, Shireen. But in the short term, we're going through an election year. There is fair amount of tailwinds that we have from good employment rates, good consumer demand, but there are also sense of headwinds with government spending, with inflation, with interest rate environment. So I think while the demand is holding up and businesses' top line is quite strong, they are still taking a cautious approach, investing, but being measured.
And when you say investing, is it incremental investment or is it really redeploying capital from one area to the next?
I would say the latter. So AI is very, very real, and everyone wants to invest in that.
So where are they pulling money out of and putting it into AI?
And the AI has both an applicability on the growth side, but also on efficiency and cost side.
Welcome back. You're still tuned into MF Corner, where we spoke about swing pricing in depth and try to understand what this concept is really about. Let's talk about another important and interesting topic. Let's welcome Neerav Karkera, the head of research at Wisdom, and let's try and understand and analyze what does the cash part of a portfolio means when it comes to mutual funds. Neerav, good afternoon. Always a pleasure speaking with you. Thank you so much for joining us today. Well, usually when we look at mutual funds, we talk about what is the equity portion, what are the stocks a fund holds, or maybe if it's a debt mutual funds, what are the constituents there? But is it very important to analyze the cash component of mutual funds? And if yes, how does one do that?
So hi, Sonal. This is a really interesting topic to talk about, because often when we talk about funds, we'll end up talking about equities and debt and allocations within it. However, little do we realize that cash as an allocation is also a very critical element that one needs to assess while evaluating a mutual fund. So yes, definitely right at the outside, definitely it is important to consider cash allocation while evaluating a mutual fund. In fact, what's more important than assessing the quantum of cash that has been allocated, it is important to understand the reason and the context why such allocations were made towards cash. There are two primary reasons why cash allocations are made largely. Number one, to manage fund flows, to manage redemptions, etc. You keep a certain small percentage in buffer as cash, so that you don't come under a lot of pressure to liquidate investments each and every time there are redemption requests that are supposed to be serviced. So this is the straightforward, the simple reason for why cash allocation is made. The second one is something that most people don't seem to acknowledge or appreciate as much, is that cash allocation is also an active fund management call. So especially in terms of equity funds, right? A cash allocation could be a very active way of holding on to dry gunpowder and waiting to deploy those funds if, as a fund manager, you believe that certain opportunities are going to be available at a better price point. So that's one. Second, cash is also an effective hedge against extreme volatility within the space you're operating in. Let's talk about certain funds, if who typically operate in a very narrow universe, like a sectoral or a thematic fund. If the sector or the theme itself is undergoing a rough patch, a fund manager may effectively hedge his exposure. In fact, it's not quite a hedge; it is defending his exposure to such long positions by holding on to a larger proportion of cash. So this way, there is lesser percentage of the portfolio that is exposed to the rough patch, and this in fact helps the investor makes more in terms of real returns by way of protecting the investors from the downside. So the context is very important. Cash in this situation, as you would realize, it could be an asset or a liability depending on how you use it. If you use it well, if you allocate to cash to defend against rough patches, if you use it to wait out for a better opportunity, it is an asset. However, if you sit on excessive cash while opportunities are available and you do not participate, you always run the risk of underperformance merely on account of being underexposed or having limited participation into the entire uptick that you could have easily participated into if you did not allocate that portion to cash.
That's very helpful because, usually what everyone looks at, as we've been pointing out, it's just where funds are invested and not when it is kept in that cash basis. So, is there a minimum amount that every mutual fund keeps as cash on an average always, considering steady market levels? Is that also something that investors should look at, or it is ad hoc, depends on the funds and the market conditions?
So mostly it depends on the market conditions and the type of fund and the universe that it is operating in. For instance, if you look at ETFs and index funds where there is no real need to hold on to a lot of cash, because especially not from an opportunistic standpoint, right, or from an performance defending standpoint as well. The cash allocation for more liquid ETFs as well as index funds would be in the range of, let's say, 0.2 to 0.4 percentage types, right, as we speak. However, if you look at certain more actively managed funds, probably those who operate in under the thematic category, it could be much higher, probably in the range of 7 to 8%, as we speak right now. So that offers a significant headroom to tactically deploy as well as retract cash from the markets at the same time while maintaining enough buffers for redemption. So these two are key examples of how cash portion is not really steady across the board. It really depends on the kind of fund and the context. Like I said earlier as well, the context is really important. The timing of the context is really important.
We take that point. We'll discuss about whether cash components are different things for debt and equity funds, but you've very helpfully given us or provided us a table as well. So let's try and understand that. What are the cash levels that different AMCs have at the current levels? And, should investors worry when the cash levels are higher? Is that a sign that maybe AMCs are finding valuations to be higher, or it's the time to redeem some of the money?
So, cash could indeed be one of the lead indicators. In a world where most decisions are made basis hindsight, I feel cash allocation is one of the very few lead indicators that can actually help make a very good decision in terms of understanding how is the fund viewing the market and how does the fund wish to play the market. First thing right off the bat, I'd like to make it very clear that a higher cash allocation does not always indicate a case for caution. It is not necessary that if an asset management company is sitting on higher cash levels, it means that it is not comfortable with the valuations out there. It is also possible that it is expecting certain more opportunities to come up in the distinct and very near future. That's one reason they could be waiting out. Two, it could be a part of an overall deployment strategy where, a fund house would like to participate in select opportunities at, different intervals. And so it would need cash to continuously deploy, right? So that's another reason. Another third reason why they could be holding on to cash is to, apart from, of course, holding cash for redemptions, another important reason that why AMCs could be holding on to slightly higher amount of cash is if they wish to participate in one-off events also. Like for instance, we do know that mutual funds do participate in several IPOs, especially in the anchor round. So if there's limited visibility of further inflows, or they would like to participate to a larger extent, they could hold off on some cash and then deploy it on that for that very particular one-off event or one-off opportunity that comes across, right? So these are a few reasons, why an AMC could do it. And, at an AMC level, if you look at it, the cash levels are very different for different kinds of AMCs, okay? And it is different majorly due to a combination of three things. One, what's the kind of cash management policy they have to manage redemptions and fund flows. Two, what is their view on the markets and how are they reflecting it via cash as an active call, active allocation? And three, what is the portfolio construct? So if if a mutual fund has if an MF house has many index funds and ETFs, the aggregate or the average cash holding levels could be really low. On the other hand, if the fund house has many actively managed funds operating in very narrow universes, having many thematic funds, it is quite characteristic that there could be patches where the levels are going to be much higher. So, for instance, there are a few fund houses where the levels of cash holding has gone up in double digits, almost above 12 and a half or percent. It would include the likes of PPFS mutual fund. It would include Quant mutual fund. It could include Shriram mutual fund, Quantum mutual fund. Now, for each of these funds, right, with a cash allocation of, let's say, at an aggregate level, beyond 12 and a half or percentage of the total assets, equity assets specifically, it may be attributable to the kind of funds that they have, as well as their current view on the markets. Most of these AMCs have been really vocal about their view on the markets and how they may not be very comfortable participating at current levels for some of their funds, right? Now, one thing that's very important to understand is, even if for instance, let's say a fund house has a small cap fund, but the AUM of that small cap fund is a large proportion of their total asset base, and they are not comfortable to deploy in the small cap universe at this levels, the overall aggregate cash holdings could seem slightly higher versus relative peers, right? So, this is one example of how nuanced, interpreting this entire cash allocation thing could be. And most of these details are public domain, right, and very easily available. It does make sense for, each one of us as an investor to not just look at the cash allocation, but try and interpret the reason and the context behind such allocations.
Okay, all right. That's a very helpful explanation, because sometimes there's fear, right? When the cash levels go up, that's the usual question. Are you keeping a lot of cash currently, considering the market levels again at a record high? So that's the question a lot of AMCs have to answer as well. Nirav, we had a lot more questions, but we are completely out of time today. But thank you so much for joining us today and explaining this important aspect of mutual fund investing to our viewers. With that, we'll take your leave on this edition of Mutual Fund Corner today, but stay tuned for Closing Bell to take you through the last hour of trade.
At the near term, you can deploy the technology in business as usual activities and fund your innovation and growth cycles from there.
So, pause for now, you believe at least through 2024 till the US elections are out of the way, which is November. So it pretty much takes care of this calendar year.
Yeah, I would say measured. We are going to see spending, but there's going to be a dislocation of spend. And it's going to be, in certain ways, self-funding, at least for now.
Service by way of hostel accommodation is presently not exempt, which are being provided for students if they are outside of educational institutions. Am I right? If they are within an educational institution, they are already exempt. Now, hostels which are for students but outside of an educational institutions are also getting exempt. The measure of relief for students and working professionals, Council has recommended to exempt accommodation services having a value of supply up to 20,000 per person per month. The condition, of course, is those provided these services are supplied for a minimum continuous period of 90 days.
the valuation is just the score, is the way we call it. So we are all about playing the game. And our game is accelerated computing and building a platform. So for us, generative AI is the killer application among other applications for accelerated computing. And so, you know, we've been doing deep learning since 2012. Jensen, presented to OpenAI the first DGX in 2016. So that's a very, very long and deep involvement with all of the ecosystem associated with generative AI.
So no overnight success, which is what people sort of suddenly, like where did NVIDIA come from? To the layperson, I mean, it's just a phenomenal story that's taken shape in the public perception over the last few years. But there's a lot of work that's gone in over the past 2 decades in building it out to be what it is today.
Yeah, I mean, we've been working on this for many years. We always work with all of the developers and all the research laboratories and universities, all of the startups, small startups as well as mid-size and large startups, and all of the, global research centers, global capability centers, and major ISVs. It takes a long time to build a market.
It does take a long time to build a market. Umesh, let's talk about what is faster, leaner, better now at Uniphore, since we're talking about what generative AI can potentially do. I mean, how has life changed for you at Uniphore?
Well, first of all, great to have you back in Silicon Valley, Shireen. Much like you were talking to Shankar about these things are not overnight success. I founded the company, hard to believe, 16 years ago. We've been at this for 16 years, and sometimes I meet customers who think AI was born after the GPD moment.
Right.
But some of us have been at this for a decade and a half and more. But what's truly shifted in the last couple of years, which has been truly profound, we today serve some of the biggest companies, not just in North America, but around the world. These are large banks, large telecom companies, large retail companies who've been using AI, but now with Gen AI, what's profound is AI is now a boardroom topic. It's being discussed in every board meeting in a publicly traded company.
Yeah.
Wall Street is measuring companies on their AI strategy, and the stock prices are being shifted up or down, depending on what companies announce. And for that reason, CEOs and CIOs are now singularly responsible. A lot of the customers that we've been dealing with
Taiwanese index is down 180 points, but we do have some green on Hang Seng. A spectrum worth 96,317 crore is up for grabs.
The Nifty Bank saw no follow-through from last week, but in the last hour, I mean, it did give you a sense that maybe it'll look, maybe there is still more steam left.
Bandhan Bank RBI has appointed additional director on its board. RBI has appointed Arun Kumar Singh.
India has a current account surplus. It's a small one, about 0.5%, 0.6%. Year ago, of course, it was a 1% deficit.
23,580 on the Nifty, 77,510 on the Sensex.
It's been an 8.3% block deal. The average price is at about 847. The stock is currently hovering there. So it's an 8% fall compared to where it closed yesterday.
Specifically, Amara Raja is working on advanced applications like electric aviation as well. And that is perhaps something that, could be a re-rating for the company.
The markets have surged at the highest point of the day.
Monsoon crop, which was all set to hit the market towards the end of July, is going to take some time, which means that the much needed respite in the price of tomato is going to take some time. It's going to further delayed.
Above the 23,660 mark, so comfortably higher by 125 points.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal Studios in Mumbai.
Well, that was the last trading. That was a trading session that we've had so far. This is Closing Bell. We're coming to you live from always from the CNBC-TV18 Motilal Oswal Studios. Prashant Mangalam is here, and we'll have Rima join us in just a bit right here.
Yeah, Rima will magically appear in just a bit. She's somewhere around, we don't know, merging with the set this time.
Mangalam, yesterday was a 200-point recovery from the day's low. today there is no such need to say off the lows or anything. It's a solid 150 points from where we left off yesterday, and it's all banks and financials.
Absolutely. You know, what's interesting is that yesterday we tested the lower end of the range. We bounced back from there. Today we tested the higher end of the range. We broke out beyond that. 23,700 is what we're seeing on the Nifty, led, of course, by the Nifty Bank. We were talking about how if the market has to break out of the range, it has to be either the IT index or the Nifty Bank. Nifty Bank is the one which has said, you know, I'm going to, you know, take the honors here. But it will be interesting to see whether portfolios are feeling happy today or not, because in a divergence, we have the frontline indices doing very well today, but the mid-cap index is down about 0.4%.
Yeah, sulking. I mean, broader market is not doing as much today. Actually, market breadth is slightly negative.
Yep.
You know, the mid-cap index is down 0.5%. Small-cap index is flat. So, yeah, I mean, you know, it's almost 100% financials led move. And when is the last time that you remember something like this, that it's not just you know, even within financials, it's private banks, private financials actually. So, you know, take a look at the top 4 gainers on the Nifty: HDFC Bank, ICICI Bank, Shriram Finance, and I think Axis Bank. So these are the 4 names which by themselves are powering this 150 odd point move, and everything else is sort of taking a it's you know, the rest of the market is pulled when the Nifty Bank did not participate, and of course banks now pulling their weight finally. So a day's break yesterday. We were saying this in the morning that towards the end, in the last 30-40 minutes, actually last hour, banks did look like there perhaps was a little more left there. And it's sort of come back in a very, very sharp, strong way. As I said, market breadth is a little negative, and you know, it's okay. We can have one of those days where the rest of the market takes a break, and one of the underperformers, relative underperformers, which is banks and financials, they are participating and coming through. So that's going to be the focus here over the next 60 minutes in terms of how much more and which are the best ideas here as far as financials are concerned. Remember, you know, FIs are still at a net basis year to date, they're once again big sellers. And a lot of the selling would have gone on in financials. There is a lot of room. I mean, if FIs are back, and they've been back since the election results have come through, there could be a lot of room here in the financials for them to really return. So is this head fake, or one day or a week long thing, or maybe something a little more sustainable? That I think is what we're going to sort of decipher. People have been calling for this banks rally to come back in a strong way. Earlier, it used to be that, well, everybody owns banks, so who's the incremental buyer? But I think that space has been created with a lot of selling which has taken place, and I think some of that seems to be returning right now. And as promised,
yeah, we have
Rima
magically appeared here. Rima, tell us, what did you bring with your magical spell?
Well, it's a bit disappointing, right? The day when you've hit so many milestones, 78,000 on the Nifty, on the Sensex, the Nifty touching 23,700, the advanced decline ratio is actually in favor of the losing side. You still have got more stocks declining compared to the number of stocks advancing. The mid-cap index is down 0.4%. As Prashant said, it's fine. One day you can take a breather while, you know, banks take top honors. But, you know, it's a bit disappointing, the advanced decline ratio. The small cap index, though, is holding up in the green with a gain of close to about 0.3%.
You know, for me, the most important thing, because it's a financials-led rally, and it is a financials-led rally on a Tuesday, which also is the financial services expiry, where does it go in the last hour of trade? Because the Fin Nifty comes up for you. The Fin Nifty is somewhere closer to 23,500. Remember, for the longest time, the Fin Nifty and the Nifty itself were at similar levels. Now the Nifty is around 23,700. The Fin Nifty closer to 23,500. 23,500 call writers are very active in today's trading session. So if we see, you know, a breakout above that, then maybe we could see a sharp pop-up on the way up in the last hour of trade, last 30 minutes of trade, so to say. And at the same time, if we break down below that 23,450, where a lot of put writing is there on the Fin Nifty itself, then maybe there could be a bit of a decline in the last hour as well. So where that goes is something we'll be watching out for. And in particular, what's standing out in today's trading session is that a lot of these sectors which saw big rally are now seeing some profit taking. Case in point, real estate. So pull up something like an Oberoi Realty, down about 4.5%. DLF, down about 2.5 odd %. We're seeing some decline in the rail pack as well. So all these railway stocks are finally seeing some profit booking. I don't know whether we can call it profit booking or just a dip in an otherwise big up move that we're seeing out there. And macro tech developers, for instance, Lodha Builders, that is down about 5%, alongside all the rail tails of the world, which is down about 3.5%.
Absolutely, and I think PSUs as well, right? I mean, I think as you said, maybe a bit of a breather, a bit of a break. They've not defense stocks. I mean, I think that's a separate. You've got to carve out a separate category because those are, I think, the last I checked, still zooming. But the broader Nifty PSE index is down about 0.65%. I think the shipbuilders specifically are the ones which are still doing well today. They're off the highs though. Mitesh is with us to run us through what he'd want you to do. Mitesh, good afternoon. You know, the previous high is gone for the Nifty Bank. It's new highs. I mean, so why don't we start there? Financials and banks and what you're seeing. It's purely that bank-led rally today.
Yeah. So, Prashant, I think this is something, which we've been highlighting that it is the, and in the banks also, you can say that it's the private sector banking space which is doing much better. You can see the chart of HDFC Bank and the others, and HDFC, I think, it's just breaking into, or in the budget breaking into fresh all-time highs on a closing basis at least. We've not had a daily closing for the stock above the levels of 17, 16, and we are right there right now. So maybe today will be the day. But what is important is that the long-term and medium-term charts have improved. So, even if there's a pullback, the stock will eventually get past these levels, head towards 1850 plus levels. So quite positive over there. And therefore, I think, I believe that all this underperformance of HDFC, Kotak, etc., ICICI, etc., will see some kind of a catch-up against the PSU banking names and will keep the Nifty and the Bank Nifty both in good stead. On the stock side, I would recommend buying into Tech Mahindra with the stop at about 1400 for targets of around 1460 on the upside. And IT is also a good space to be in. And the other one is a sell on Oberoi Realty with a stop at about 1847 at a target of around 1760.
Okay. Let's, that's real estate. Let's talk about the telecom sector. Today, the 2024 Spectrum auctions begin. Ambit has come out with a note titled Positive Sum Game, which basically means we're now entering into an era where everyone does well. The key reason is that tacit government support is likely to drive sustained tariff hikes till 2030, which means it's not a one hike and done that the street is anticipating. According to Ambit, they're penciling in a 20% tariff hike in September of 2024. That's 2 months from now. And after that, once in every 2 years, they're saying we could see a 12% tariff hike till 2034. So the basic narrative is sustained tariff hikes from here on for the next 10 years. And therefore, they're now saying that the industry's revenue growth could be at about 13% for the next 5 years, which is higher than what they were earlier anticipating. And not just that, this is the mobility-led business. Telecom companies are also focusing on adjacencies, like home broadband is one big area. Two is enterprise, where they are providing them services like data center, cloud communication. And also another area of potential income is that suppose if there is any form of internet tax on OTT players will have to share some of their revenues with the telecom companies, and that could be an incremental source. So these are some factors which Ambit believes will result in a positive sum game for the entire sector. So they're positive despite the FY24 re-rating. They've reinstated their buy on Airtel, which according to them is the best play on the telecom tariff reset and events like the Jio IPO. Bharti target price is 1,663. They've turned buyers on Vodafone Idea and Indus. On Vodafone Idea, target price is 21. On Indus Stars 2, it stands at 411. Bharti Hexacom, they call it a cozy duopoly in Rajasthan because it gets about 70-80% of its revenues from Rajasthan, where there are just two players, and Bharti Hexacom is the market leader. So it's a pure play on the rising telecom tariffs and the reset. So bullish on Bharti Hexacom too. Reliance is a sell though at 2,600, so downside from current levels.
Rather interesting, and what interested me the most was the possibility of an internet tax coming in from the OTTs going into the telecom space. Let's welcome Deepak Shenoy, who's the founder at Capital Mind, joining in now on the show. Good afternoon, Deepak. Always a pleasure speaking with you. What are your thoughts on the telecom space? I mean, earlier it was just a two-horse race. Now suddenly we have the big up move that we've seen in Vodafone as well. A lot of the brokerages now becoming positive on Vodafone. So now it's extended to more than two. And if that is the case, then would you look at Vodafone, which is a low ticket item with a big upside potential, or do you look at Bharti Airtel as a stable compounder?
So honestly, Mangla, we have Bharti Airtel and Reliance in our portfolio. So we don't have Vodafone. There's a specific reason because I think Vodafone is going to have liquidity issues going forward. Now, what they've done is they've issued a truckload of shares those shares add to effectively the overall equity, right? So when you start getting earnings, whenever they do at some point, it's going to spread across a lot more shares than was earlier envisaged. So even if they can convert some of their vendor payments to shares, that just increases the pool of shares available. So you're diluted even more. More importantly, the government hasn't backed off from the obligations that Vodafone has to pay, which I think starts from next year and goes onwards, increasing at a fairly large clip, I think 40,000 crores per year. They have actually made their debt profile worse. Earlier, their debt was primarily a very small amount to banks. Now they've added another 10,000-14,000 crores or so to that SBI loan, which actually makes them even more leveraged in that sense. And also, their equity is negative. They have a very deeply net negative equity balance sheet. So effectively, they're technically insolvent. They don't have any shareholder equity. It's negative right now. So to be able to bring that back to par, they'd probably need another 40, 50, 60,000 crores in equity alone just to bring shareholder equity to zero. And then, then they'll talk about, positive returns and all after that. I believe they're going to struggle, although I think now is a little bit of a honeymoon period for them because they've kind of got some reprieve and they've been able to do a rights issue and or an issue as recently as I think a few months back. I think going forward, they're still losing customers. So the core business is not doing very well. They haven't yet talked about how they're going to invest in some of the new technologies that they're going to need. It's going to need a lot more capital than they've raised so far. And I think there will be a bunch more liquidity issues. So I don't like Vodafone per se. I know the market kind of seems to like it even now. But I believe the beneficiaries of that will be Bharti and Reliance in that context. So we're long on those. So I'm biased because I have those shares, not Vodafone.
No, absolutely. and why not? Deepak, coming to you, but I just want to go across to Sonia first. Amara Raja, of course, has been in focus all day today. And there's a technology tie-up which they've entered into. Markets, of course, giving it a big thumbs up. Sonia, tell us more.
Well, thanks a lot for that. As you rightly pointed out, it's a big thumbs up to this particular technology arrangement that Amara Raja Batteries has signed with a Slovakian company, GIB, which is Gotian Inobat Batteries. Now, this is for lithium-ion cell battery manufacturing, and they are working on advanced technologies, whether it's electric vehicles, electric aviation as well. Now, Amara Raja recently upped its stake in this company, Inobat, to 9.3%. It invested 20 million euros for additional 9.3% stake. Now, Amara is going big in this new technology space. So they recently invested 9,500 crores in Telangana for advanced research and innovation. And a lot of brokerages are bullish on the stock. Investec has a buy, JP Morgan has a neutral. They say that the company is taking all the right steps and they are confident about the company's ability to progress towards the 16 gigawatt capacity target. They are also, all of this also enhances Amara Raja's capabilities in transitioning to lithium-ion cell manufacturing. Now, if you look at the stock is up almost 80% in the past 6 months. It is quite expensive, but it still trades at a discount to its peer like Exide. So if you look at, the move right now, Amara is still trading at 23 times forward, while Exide is trading at 31 times forward. This is before today's move. So, of course, narrowing a bit of that valuation gap with Exide, but still trading at a bit of a discount. Back to you.
Absolutely. Thanks very much, Sonia. Very helpful. Deepak, do you own either Exide or Amara?
We own Amara Raja, ARE and M here. We own it in two portfolios, actually. One is a momentum play, but one is also our long-term fundamental play. We picked it up a while back. The idea was, of course, that they were actually a little bit further in the electric battery space. So lithium-ion, they were doing a little bit more work than Exide at the time. And I still think that they have the potential for more capabilities. I think the recent move has been on the back of some political considerations. But I think from a core business, they have the distribution network of size that is required in India. If electric is going to get adopted from a transportation perspective, you're going to need your tentacles everywhere in terms of being able to service customers who have your batteries. And especially if you get into particular area which is replaceable batteries for two-wheelers. So you're going to need, I think you're going to need a better distribution network. Some of the newer battery players have good technology, but not the distribution network. And I believe that plus their focus is to moving towards electric vehicle in different ways. Electric aviation was something new. I did not know that this was such a in such an advanced stage, but I think this might also be very, very interesting. Imagine planes flying electric. So I think that's an interesting new development. We own it, of course. It is expensive, but I think long term these companies. Both Exide and Amara Raja are probably much more valuable than they are today simply because of their reach across India.
Deepak, morning. Is Craftsman Automation a stock that you've looked at?
No, I haven't tracked it. It's been a while, I think 4 or 5 years back, but I don't remember much about it. Sorry, I don't have any information on that, Reema.
All right. What about Happiest Minds? The stock is cracked close to about 9% today on the back of that large block deal that we've seen where promoter Ashok Soota has brought his stake down. Is this a buying opportunity?
Happiest Minds, I think in general IT, we don't own Happiest Minds. I don't have a specific view on Happiest Minds itself, but I think the overall sector has issues. There have been, if you've seen the latest, even yesterday's release by the RBI of the balance of payments, you're seeing the IT export growth slow down. So it used to be in high double digits, 15, 17, 20, 22% for the last few years. But now it's come down to 7% year on year. And I think that is part of the contribution here is the slowdown in the US, the change in US spending patterns from a technology point of view, the advent of AI and the change in hiring patterns that we've seen across the industry. I think it will take till the end of this year before we get any reasonable amount of guidance for how they will see the industry moving next year. So while we have some of the larger cap players in our portfolios, I think we will, at this point, hold off on some of the mid caps and kind of wait till, the sector kind of evens out. It will take some time, I think, before margins start to come up again. They enjoyed a good margin period in 22-23. Now they're going to face the reverse of that for a while. And then I think from next year onwards, they'll start seeing a move up. That may be a better time to buy mid-cap IT than to look at it now. Nothing on Happiest Minds per se.
The gains in the financial space are now broadening out. We're seeing some pickup in housing finance space as well. So you look at something like LIC Housing Finance, that's moved higher and moved to the high point of trade. Just the last few minutes or so, we've seen a vertical up move in something like Canfin Homes as well, which is moved higher. NBFCs like L&T Finance, etc. are doing well. Shriram Finance, of course, we spoke with the management this morning. That's doing well too. And what's actually got my attention is the tire space, Deepak, because right now we're seeing an up move in all the tire stocks. See it, for instance, the management had joined us sometime last week saying that on their current capacity, they can actually do 15,000 crore worth revenue. Apollo Tyres has moved to the high point of trade. MRF on its big base, now a 1,27,000 rupees stock. So we're seeing an up move there. Is there anything that you like in either housing finance or maybe auto ancillaries like tires, etc.?
So nothing in housing finance yet. I think housing finance has, there's been a priority sector reclassification of sort, but that doesn't affect housing finance too much. By the way, housing in general is growing, still growing very well, especially at the 50 lakh plus level in India, and whether it's at banks or housing fund companies. And the RBI has moved to cut personal loans and unsecured loans has resulted in banks pushing their secured portfolios to a much larger level. So I think that way, housing finance companies might see a bit of a benefit in terms of more availability of funds for them from banks as well. But I don't have a pick there right now. I think Canfin's an interesting play. It's always been interesting. It's just relatively small. But on tires, we've been looking at the tire industry for a while. We are, of course, very interested in auto. But within the tire space, I used to have Balkrishna Industries, which is more a sectoral, a specific kind of a player, which is more about tires for construction equipment and tractors and non-standard tires per se. We haven't seen the bigger standard tire companies OEMs for cars and so on. I think this is an exciting sector, but we'll probably play it last. We bought the manufacturers first. We bought some ancillaries. I think the tires will come towards the end. So it's good to see them moving. I have to see whether the fundamental reasons are there yet. But we haven't seen that much growth recently. So we'll wait for some of the numbers to show up in the results. Maybe after July, we'll take a call on them.
Absolutely. By the way, Deepak, just an open-ended question. And have you added anything new, completely new in your portfolio since the last time we spoke?
I think, so we've very few stock additions. In fact, this month has been, kind of just consolidating and adding more to the positions we have. Some of the, I think we've focused on some of the themes around manufacturing. We're increasing some of the plays we have in defense and in the railways space as well, but also in hospitality. So I think last time I might have mentioned this to you, we added a hospitality player in the hotel space because, I think given how travel is going and you can't find hotel rooms, you can't find airplane tickets for what used to be reasonable prices. I think, this sector has got a long way to go. India is traveling and India is not stopping to travel. So we are more interested in that space. Might add, Indigo has been looking exciting for a while. So, it's just about the right time to buy it. Sometimes you identify a theme and then you have to wait for the players to look exciting enough for you to buy. We haven't found anything yet, but, still looking. And of course, in the manufacturing space, I think lot more to go. So whether it's companies like Keynes in the semiconductor space or other companies in the high-end machine and the engineering space, we've actually continued to add to our positions. I'm sorry, I'm not taking too many names because we're buying a bunch of them right now. But these are our interest spaces right now.
Does travel tech excite you? If you're looking at some of these names, TBO Tech, for instance, gaining for the second day running, we have Goldman Sachs initiating coverage on that. Then you have a bunch of other players as well in this space, which enable. Ixigo had a great listing last week.
Ixigo did, and I think that might be an exciting player as well. We also, we own RateGain, so it's one of the players in the space, but we haven't added any more to any of the others. Ixigo, generally after IPO, we wait for at least 1 quarter's results to see how things pan out. Because, then the prices stabilize. You get all the QIB players who have been jumping to buy at the IPO, which will come for selling just about a month afterwards. So kind of wait till all of that dies down before we purchase or make a purchase in some of these stocks. But we'll evaluate it after the results for sure.
All right. Deepak, great conversation as always. Thank you very much.
And congratulations, your PMS has crossed 2,000 crore in AUM and it's given a return of 30% every year for the last 5 years. So congratulations, well done.
Thank you. We're very small, so thank you so much.
Which means a lot of room to grow. So congrats, Deepak. Really appreciate your thoughts and wisdom over the years. Thank you. And look forward to our next chat. We'll take a quick break here. We have Weber Sangvi of ASK Hedge Solutions with us on the other side. We continue our discussion on markets.
To GPT, AI was being bought as part of a software as a service application. Something in marketing, something in contact center, something for sales. Now AI is an infrastructure that no company can ignore not having within itself. And for the last couple of years, we've seen tremendous traction. Matter of fact, we grew our top line a little over 60% last year, which was an acceleration from the previous year, and we're seeing the same trend continue now. So I'm seeing an insatiable desire at the C-suite around the world about how do we become AI natives? How do we keep our sovereignty when it comes to AI? How do we not share our data with somebody else? And what kind of internal tools and technologies do we need to make this all happen?
Speaking
of startups and high tech, the Wall Street Journal has a front page today on comparing what you did with Cisco and what's happening at NVIDIA today.
Yes.
And Cisco was in 2000 the most valued company in the world on the back of the big transition that we saw then with the internet. And that's what we're seeing happen with NVIDIA becoming the most valued company. As people draw these comparisons, what's going through your mind?
Well, first of all, it shows you that technology moved from something that the techies did to impacting every one of our lives. So with the internet, changing the way you work, live, learn, and play, when I said that in '93, most people said, no, it's techies talking. It clearly did. As you watch, there's new generations of leaders about every 10 or 20 years. And I think it's very healthy. So it's Cisco for the internet, then about 4 or 5 players for the cloud, and now NVIDIA is clearly leading in terms of AI. And they're kind of like the indication of the infrastructure of AI. If you want to know how AI is doing, look at how fast NVIDIA is growing. And it is growing great. What is it, 540% in the last 2 years. Today, if you're not into AI and if you haven't got a good AI strategy, well, implementation, investors won't invest in your company, even if you're a manufacturing company or a semiconductor company, etc. The pace of change, however, is different. It's about 10 times faster and can be 10 times bigger than what we saw just a few decades ago.
Welcome back. Most of the gains are intact on the benchmark index, but a few railway stocks like IREDA, RVNL are under pressure. Stocks are down between 2 to 3%. Fertilizer names like RCF, NFL are weak. You're seeing cuts of close to about 2–2.5%. They were down yesterday, 5–6%, but there is follow-on selling seen in the fertilizer stocks as well. And metals on the whole is having a rough day. The Nifty Metal Index is down close to about 1%. But let's get you a CNBC TV18 exclusive now. We learned from sources that the government might review the PSC policy. Tim C is here with the details. Hi, Tim C.
Well, as you rightly mentioned, what we are picking up from sources is that the government is currently mulling a review of the public sector enterprise policy, which actually spelled out the privatization roadmap. Remember, public sector enterprise policy was notified on the 4th of February 2021 during the Atmanirbhar Bharat package, and the review is likely to include revisiting sales of public sector enterprises under the policy. What we are picking up from sources additionally is that government may consider selling land parcels, etc., monetization of select assets, but it may pull back on the entire privatization issue. The political will is not in favor of exiting family jewels, and that is exactly why the government is looking or considering at such a sort of a review. Meanwhile, as we speak, no decision yet has been made finally on this review of the policy, but yes, sources are indicating towards it. Just to remind our viewers, government has already called off the strategic sale of BPCL. The scope of this PSE policy was to exit CPSEs, public sector banks, public sector insurance companies. The policy did not apply to certain classes of public sector entities, such as strategic sectors where government decided to have bare minimum presence were like atomic energy, telecom, space, defense, transport, power, petroleum, coal and minerals, banking, insurance, and financial institutions, whereas the policy laid out non-strategic sectors where it considered for privatization. So let's see whether this sort of a review happens. What is it that finally takes place? What sort of a shape does the review take to this entire policy? So that is something in offing.
So, Timsy, basically, this is, of course, both for already listed companies and private companies as well, right? Where there was...
As I said, the scope of the PSE policy was to exit CPSEs, PSBs, and public sector insurance companies. So it covers all. Covers the entire gamut. Got it. Thank you very much. And I think, of course, we'll follow the story. But I think the first real indication of what the government really wants to do, and I think we'll get it in the budget, which is not very far away now. Really, direction for the next 5 years will be in the second half of July when the budget is indeed presented. Vaibhav Sanghvi is with us, CEO at Ask Hedge Solutions. Vaibhav, good afternoon. Good to have you with us here. It's largely banks today, so give us a color on what you are doing at Ask Hedge
because the rest of the market isn't really pulling its weight today. It's purely banks.
Yeah, of course. I think Prashant, rightly observed that. But one interesting point I would, want to make here is that while today it is banks, yesterday was something different, and tomorrow is likely to be different as well. The point being that I am trying to say is basically from when we look at the benchmark indices, we are seeing pretty quick rotation in terms of these sectors, thereby lending good amount of support from to the benchmark indices from a shorter term movement perspective. While 23,500 looks to be kind of breached on the higher side, my sense is basically the momentum will is likely to continue and further accelerate, probably looking to churn in terms of the sectors as well. So we will hear about these kind of stories, about a particular sector in terms of why the interest is there on that particular day. But what we can only say is basically that the frontliners are now getting better attention, from a valuation differential perspective as compared to the mid caps at this point in time.
So Vaibhav, if the market continues to see a lot of churn, sectoral rotation in and out, how does one play it? What's the portfolio construct you would advise?
See, Rima, I think if you're trying to trade these markets, I think, and you keep on looking at the price and keep on rotating your sectors, then it's just futile. It's extremely important to kind of focus on what you like from a fundamental perspective. Keep holding on and just wait for that sector rotation to kind of get into your sectors or your stocks, when it comes by. So while the thesis is something there for a medium to longer term, my sense is basically it's just a matter of time. It will kind of catch up to your portfolio of stocks. So very tricky to kind of trade in and out on these kind of sectors, looking at just the momentum in terms of the price movement.
So if you could then make it sector specific for us, what is it that you at Ask Hedge Solutions like as a house, and where do you find momentum which is tradable in the very near term, medium term, and long term are the things that you like? Give us a sense.
So what we would probably here concentrate on, two larger themes. One is, of course, the upcoming budget, and we will eagerly wait for looking at the direction of the policy framework, in the sense that last 10 years has been extremely laser focused on supply side. We want to see that whether that continues or probably also or consumption gets some amount of attention as well from the budget perspective. While that is the case, our estimate is that the supply side focus will continue, the capex will continue. So we are bullish on overall capex industrials, capcos kind of segment. At the same time, we are starting to get pretty positive on IT sector as a whole. So that is something which we like. Some rural focused themes, and tactically the private banks which may continue to trade higher, especially from the long side.
In IT, is it frontline IT or mid-cap IT? And what will be the driver of that?
I think our focus would largely be the frontline ITs at this point in time, because the bottoming out of the business story, I think, will attract a good amount of allocation to the frontline companies, where what we see is basically from both the foreign and the domestic investors, both of them are underweight in terms of their portfolios. And when the business is kind of bottoming out, probably in a quarter or two, we'll start seeing those kind of results come about. But stocks will start moving in terms of the commentary, from these companies. So this quarter, probably we'll start to see that. And as one of the Accenture's commentary and the results actually showed that path as well. So we do think that in the initial part, it'll start with the frontliners and then probably trickle down over the mid caps, because there the valuations are a little expensive.
You said you're also playing the consumption theme. How are you playing that?
From consumption, if we look at, is basically we have to be a little kind of tactical, or probably when we talk about consumption, we may probably differentiate between staples and discretionary. And in discretionary at this point in time, we are largely focused on the durable segment. Whereas in case of the staples, we'll wait for the quarterly numbers And the first half of the monsoon is also likely to be a little weak in terms of the forecast, which has already been there. So once the results are out, we see some amount of kind of correction on these prices is where we would look to get into the staple segment. But otherwise, consumer durables is something which we are focused on at this point in time.
Rima, by the way, have you started getting expectations, IT? Just
No,
to go back
not
to the,
yet.
not yet. But expectation is building, at least at frontline IT, perhaps we will start to see some kind of
So,
better
Q1 is
growth.
typically a strong quarter for IT companies. So, in that sense, you can expect numbers to be better than Q4. But I think, again, the street will, brace for commentary, right? Does the commentary indicate that things are picking up in the second half of the year? I don't think as of now in the Q1 numbers, based on what we've seen from Accenture and the likes, that you are going to see a meaningful pickup in the growth numbers. But order book needs to be strong. It's been strong for a very long time, order booking. So that needs to sustain. And two, I think commentary that things are on the mend. Maybe post-elections in the US, the client tap may open up.
Vaibhav, your call is not just based off of the first quarter numbers and what they may say, right, in terms of constant currency growth, etc. I mean, it's a slightly, the call is that things will turn in the second half.
Of course, I think it's not only about a quarter, first quarter. I think, of course, right, Rima did mention about the seasonality. Of course, we have seen that Q1 is largely stronger, but few things at play here. As I said, large under ownership, from all the investors. To the valuations, this is one sector apart from the private banks, which we have good amount of comfort in terms of the valuations. The cash flow yields are kind of pretty attractive. And in a light where you are not seeing any crash in terms of the global economy, plus the fear of artificial intelligence kind of cannibalizing the whole business, it's now over. In fact, it is trying to give you some good opportunity in terms of your order bookings. My sense is basically from an overall sector perspective, I think all the things are kind of getting in place. So that's a sector we would keenly watch on.
All right. Thank you so much for joining in. Insightful conversation here, Vaibhav. As we speak, the market is increasing its gains and it's improving its breadth as well. So we're seeing some more stocks add themselves to the gaining list. So the banks obviously were doing well. IT index has now moved higher. Reliance, the big weight, has now picked pace, currently at the high point as well. So all of that has taken the Nifty now comfortably above the 23,700 mark. And even in the broader markets, when we started the show, the mid-cap index was down about 0.4%. Now that has curtailed its losses to just about 1/3%. Mid-cap IT stocks, Birlasoft has now moved to the high point of trade, doing extremely well. And then we have a couple of these broader markets names. Gulf Oil Lubricants, for instance, up 10%, locked in that circuit. Godrej Agrovet, up around 7%. There's been a brokerage upgrade out there as well. So big move on that counter. Garden Reach Shipbuilders and Amara Raja we've been talking about through the day. And Westlife Food now stands out in terms of an up move because we've seen the QSR space so far see outperformance only from Jubilant Foodworks and some weakness in Westlife. But now Westlife seems to have picked up around 5%. So that's the one that should come up for your screen, come up for you on the screen as well. So those are a bunch of stocks. And in otherwise weak, real estate day, we have Purvankara, which is actually locked in a 5% upper circuit. So that's another outlier in in a space where we are seeing weakness in today's trading session. Take a short break, come back, get you more on what the dealing rooms are saying in our special D Street chatter. Also tell you what to buy today or sell today for a reverse trade tomorrow.
Champion and a big believer in the India story, but there's a long distance still to go to fully realize the potential of this partnership and this relationship. Where do you believe it's being constrained today?
As the largest democracy, watching your elections just occurred, and congratulations to Prime Minister Modi. It was a smooth election. There was no issues in the market, and I think that's a model for the rest of the world's democracy to follow. And now you're seeing the country lead in innovation. My challenge is don't be satisfied with just what we're doing. We've got to dream bigger in terms of the overall approach. So this is what I really think about in terms of where we are today. I think we've got to look at where we go. I do think it will be the century for India. I think it will be also the decade for India.
the latest challenge that you're up against is the US government looking at whether again there is a violation of policy and whether there are sort of fees that are being collected without consent or explicit consent and so on and so forth. I mean, how do you deal with something like that?
Well, you first go back to the principles and the facts, and the reality is that it was the government's case is misguided, and so we will fight it and we'll refute it in court. I think if you take a step back and you think about what Adobe has pioneered, the subscription economy and the digital economy is everywhere. I think when I try and read your content, it's probably going to be available through a paywall as a subscription.
Yeah.
We have open and flexible policies where some people can pay for it up front and get a discount, and others pay for it on a month-to-month. So having flexibility makes sense. But, it's something that we will address, but we certainly believe that we have been flexible. We offer customer choice, and we're completely transparent about this. When you subscribe to the plan, it says annual bill monthly. And it's an annual plan. And so, but at the end of the day, for us, what really motivates us is the fact that we're impacting and innovating. And I think if people didn't feel like we were innovating, they wouldn't be subscribing to our services. And that's what we have to keep focusing on. Well, first, I'm really proud of what our team has done. When you think about the content authenticity initiative, something that we pioneered, over 3,000 companies have now signed up with it. While people understand that AI has all this power, I think it's fair to say there's some heightened sensitivity.
Welcome back. The 3 p.m. move on the Nifty Financial Services has been on the upside. The Nifty Financial Services has now crossed the 23,500 mark. Remember, a lot of call writing was visible at the 23,500 level itself. So the question is whether we see a blast up in the next 20 minutes of trade or not, because those call writers will perhaps have to unwind their positions. We're seeing further build up on the Nifty Bank as well, veering towards a 1,000-point gain today itself. Let's get in Nimesh with all that he's got from in terms of an insight from the dealing room. Nimesh, it's been financials, financials and financials.
Well, absolutely, and I guess to some extent it's also to do with the Fin Nifty expiry, because if you look at the top 10 gainers, the top 7 gainers are banks, and all are part of the Fin Nifty. So it looks like there is a bit of that element which is spread out on the Nifty Bank today. But nevertheless, there is buying as well, is what I understand, especially in private banks from the larger institutions. I guess the record highs are there, and that's backed by FI buying as well. The only, so to say, sore point is a bit of underperformance in the broader market stocks. And again, for second day running, there is a bit of profit booking in the PSU basket. So entire PSU names is where some bit of selling is visible from the larger institutions for the second day. I guess the trend of large promoter stake sales, PE stake sale continues. We saw what happened to Happiest Minds today. The stock is down 10% on the back of that 6% large block from promoter, and that trend is likely to continue until the cool off starts in early July for most of the corporates. But I guess today's large move is in the financials, and to some extent is backed by FI buying and some bit of Fin Nifty expiry as well, which is spread out on the Nifty Bank.
Nimesh, individual stocks, what are you picking up?
Well, a lot of action in the broader market stocks, Prashant. So the first stock is Welspun Corp, big move on that stock and on large volumes as well. I understand for the last couple of days, some domestic mutual funds were active sellers. Today was a clean out trade, so leading long only fund and couple of large family offices were big buyers, and hence you've seen a big move on that stock today. The second stock is Apollo Tyre. Even that stock has sharply recovered from the day's low at day's high now, and on large volumes backed by FI buying. In fact, the city is now anticipating some sort of price hike across the board from tire companies. So that's keeping that stock exciting. The third stock is Inox Green. That stock is buzzing at day's high. There is a board meeting scheduled tomorrow for fundraising. I understand some large marquee investors are likely to invest along with the promoters in the fundraising. So that's something to track there. And the last is, in the mid-cap space, there were a couple of large blocks in very small and mid-cap companies, the likes of Tilak Nagar Industries, Adani Services, Alchem Labs, and RK Forging. In some of them, the indication is that the promoter entity was a seller. So the disclosures on this mid-cap companies will be quite interesting post-market. But at least on few names, as I understand, the promoter entity was seller.
This the Inox Green bit, Nimesh, which is you said tomorrow. So there is this is a pref issue, and then you said some large investors are.
Well, Prashant, my sense is it's going to be a combination of both pref issue to promoters and non-promoters via warrants and could be equity, and there is a QIP component is what I understand. So some institutional investors will also come in in that fundraising in INOX Green.
All right. Well, it's a buzzing, a vibrant market Nimesh to cover, and what a time to cover it, right? So that's absolutely the case. Well, thanks for that. 100 points, which means, by the way, the market's come off a little bit. Sorry, beg your pardon, 200 points. So 200 points in the Nifty is what we are trading up by. And I think the additional push, as Mangala was earlier pointing out, was basically the banks index, which is now zoomed up a little bit more. So it's 915 odd point gain, 52,630 is where we stand at. Now, let's go across to Yash, who's joining in from the sidelines of the Adani Group Media Meet, which took place in Ahmedabad. Yash, what are you learning? What are you picking up?
Well, Prashant, as we all know, this has been an interesting year for the whole Adani Group. We had the Hindenburg incident. Of course, stocks across board crashed after that. And since then, there has been a very, very strong recovery. So the media meet that we are participating in right now becomes very important from an overview point of view in terms of what lies ahead of the group. So far, we've had the flagship company, Adani Enterprises, finishing its media meet. And there are two important points that I want to highlight here, which sort of come out of this particular interaction. The first one is that FY25 year, the group is looking at a fundraise of nearly $2 to $3 billion. This will be through equity fundraise, and this will be at a group level. Largely, the sense that one gets from the interaction is that this year, that is FY25, will be largely about projects completion under the various Adani enterprise entities and less about taking up new projects. FY26 onwards is when new projects would again start coming in. The second important part is with respect to airports business, which comes under Adani Enterprises. The management has said that an IPO or a demerger of the airports business could happen by FY28. So that's the next value unlocking proposition which Adani Enterprise would look at. As far as businesses under the group are concerned, there's green hydrogen, there's airports, there's data centers, defense and aerospace, and digital labs. The most interesting part came on the green hydrogen business, where the management has said that they target about 1 MTPA production by FY30 and 3 MTPA production by FY32-33. Now, remember, this is important because about 1 MTA production requires 20 gigawatt of capacity, which straight away means that the group looks to put in place about 20 gigawatt manufacturing or production capacity by FY30 to be able to achieve that production of 1 MTPA. Another important point on the airport side would be the Navi Mumbai airport from Adani Enterprises. The indication is that that will happen in the current financial year as well. Now, as we talk right now, of course, Adani Green Media Meet is ongoing. And there, of course, it will be very important because there's a very strong push coming from the group on the renewable energy side. Kavda, near the Kutch region, is the area where the company is focusing at, plans to put about 30 gigawatt of green energy production capacity there. So, of course, we'll have to wait for the interesting takeaways which comes from this very interesting business under the Adani Group.
All right, Yash, thanks a lot for that. So those are some updates coming in on the Adani Group. Meanwhile, bunch of stocks also spiking as we speak. We have Cello World, which has moved to the high point of trade. A decent traction is what we're seeing on names like Phoenix Mills as well at the high point for that counter too. And we continue to see some buying in names like PB Fintech, which is now up around 3.5%. So good time to get in tomorrow trade now. We have Mitesh Thakkar joining in to tell you what to either buy or sell today for a reverse trade tomorrow. Mitesh, I reckon with the way the market's moving, there will be more buys than sells?
Very clearly, yes. I think, but I have right now one sell call as well. I think Z is something which has weakened and moved to the lowest point of the day. So STBT here with the stop at 151. And look for a target of around 144. And Wipro is a BTST with a stop at 494.5 for targets of roughly around 503. Yeah.
Okay. Thank you.
503 for Wipro, is it?
Yeah, that's right.
The stock is at 497. Would you want to revise the target because it's seen a big...
No, it's a BTS. It's a 1.5% kind of move you're trying to
Okay, cool.
All right. Thank you very much for that. Let's get to the big sector of the day, and that's financials. Abhishek is here with the latest on ICICI Bank and HDFC Bank. Abhishek.
Well, ICICI Bank today crossed the 100 billion mark with respect to the market cap. So it's now the fifth entity to cross that level after Reliance Industries, TCS, SDFC Bank, Bharti Airtel. Now ICICI Bank's market cap has crossed the 100 billion mark. I'll take a look at its journey towards that 100 billion. Every 25 billion, I tried to find the journey over there. So it crossed 25 billion as on 7th July 2007, and then 31st December 2020, it crossed the 50 billion mark. Remember that they had raised capital in the calendar year 2020. So the fastest journey of 25 billion has been in 2020 to 2021. So between 50 to 75 billion dollars, that's the fastest journey that they have seen. And now as of today, their market cap has crossed about 100 billions. With respect to other financial, SDFC Bank has gained in trade today. Bernstein has put out a note over there. They have an outperformance rating with a target price of 2,100 per share. They say that ROA will improve in the next 4 years, given the fact that loan growth will accelerate more towards the unsecured portfolio, or the high yielding portfolio rather, which will drive the ROA by 20 basis points for them. Cost of funds will normalize, so they expect cost of funds to decline by 18 basis points over the next few years. That will aid the ROA improvement of about 11 basis points. And operating expenses, remember that SDFC Bank over the last few fiscals has been opening more and more branches. So Bernstein says that with the tapering down of incremental branches, their operating efficiency will improve, and that will again drive 10 to 11 basis points in terms of the ROA improvement. Back to you.
Okay, well, Abhishek, thank you very much for that. We are now at the 200 point mark, 23,740 on the Nifty, so looking very, very solid. We are taking a quick commercial break. Jay Bala of cashthechaos.com will be with us on the other side. Stay tuned.
What does this mean to me? And so, that I wouldn't call it trust deficit as much as questions about what that is. And a company like Adobe has a leadership role that we need to play, not just for ourselves with our customers, but for the industry at large about our terms of use. Yeah. I think there were some questions, and legally everybody who looked at that understood that, the content belongs to them. We're not training our models based on that. But I think perhaps in English we could have done a simpler job of clarifying it. So, which we have. And so, we've rolled it out. We are creator friendly. I think the product innovation that we're delivering, Shireen, it always, warms your heart when you look at the amount of innovation that we're delivering. And I think we've talked about this in the past. AI is going to be this incredibly enabling technology that allows us to, target a broader set of customers. And so I guess it's the era of AI. Now we can create campaigns, we can create content, we can address the content supply chain. So I'm completely convinced that AI, while I acknowledge it'll be disruptive, at the end of the day, it's going to be a massive enabler and a tailwind.
We have got majority of lender approval. We are in the process. NCLT take time and go through a whole process, which process will take place, and then it will be merged.
Okay. So by the end of this fiscal year, we could have the units separated, 6 listed entities of the Vedanta Group?
I think so, because certain things are in my hand. Certain things are not in my hand.
Okay.
It is in the hand of NCLT. NCLT normally takes 3-4 months time, but sometimes they can take 1 or 2 months more also.
Love for cricket, the passion for cricket, which you've now, along with a whole bunch of your other tech friends, brought to the US. I mean, you were in New York for the big match between India and Pakistan. I mean, what does it feel like to have actually managed to bring cricket to the US?
Well, first, I mean, I'm fortunate enough. I've been to many tennis finals, the US Open final. I've been to Wimbledon. I've certainly seen a lot of Super Bowls. The Warriors here in the Bay Area have won the NBA.
Well, we're 5 minutes to close in what promises to be a record-breaking session. The Nifty is now up 200 points. The Nifty Bank just 15 points shy of a 1,000-point up move, even as the mid-cap index is underperforming in today's trading session with a cut of almost 0.4%. Good time, actually, to get in Jay Bala of Cash the Chaos joining in on the show. Jay, it's been a one-way up move that we've seen on the Nifty Bank from the middle of last week, barring a couple of days of pause for breath. Where do you see it go from here? In fact, as we speak, Nifty Bank gains have hit the 4-digit mark, 1,000 points on that index, 52,700.
Yeah, good to be here, Mangalam. The long-term resistance for the banking index comes at about 54,000 to 56,000. So I think that's the attempt that's being made. It's mainly driven by the private sector banks, in particular by HDFC Bank, although I like Axis Bank more than HDFC Bank. And but the upsides are probably getting capped because the resistance I'm talking about is a very long-term resistance starting from about 2010. So the banking sector is likely to face stiff resistance around 54,000 to 55,000 mark. So a little bit caution there, tempered bullishness here.
What are the other trades that you would recommend, ex of these private sector banks?
Yeah, I have a general theme going on, that is a broad theme that's going on. For me, it's the green theme that Prashant spoke about just a few moments ago. I have a couple of calls on renewables. One is the Borosil Renewables, solar energy company. The stock is looking like it's breaking out from a short-term consolidation. The stop loss comes at about 460, and it has potential to scale to fresh all-time highs somewhere close to 830 plus. So I have a price target for about 840 for the stock. But it's traded very volatile, so we need to position sizes very carefully. And the other one is Ultra Green Energy. The stock has potential to scale about 2,300 and a stop loss at about 1,660 for this whole green energy thing.
What about Amara Raja, now locked in an upper circuit of about 20%? Is there a kind of breakout that you see for Amara Raja?
Yeah, the stock is still bullish. It's still got unfinished upsides to work with. But if you want to look at something else in this, I don't think this is the stock you want to be at, because it's extremely overstretched and the risk rewards are very skewed. Probably, if you were to put in incremental positions, the reward will be something like 1.5 for a risk of about 2. So that's not what you're looking at. So you can use the trading stuff about 1575 for the stock and keep a hold on it.
On Nifty Bank now, Jay, have you sort of given us levels? You talked about individual names. So if we read about 52,660, 52,700. So here, what are the levels?
Yeah, the nearest resistance is 5,400, and the support comes at about something like 49,990. So it's the resistance. I think 5,400 is going to put a cap on this rally. When it comes to the Nifty itself, which we haven't spoken about, as I said last week, as long as the overall market stays about 23,300, the trajectory continues to be up. But I think the market is aiming for 24,095. It's 24,025. It's a big resistance for the Nifty. And the drive for the Nifty and the banking index is coming from the attempt of HDFC Bank to clock fresh all-time highs past the 14,400 mark. So, probably the sentiment is coming from HDFC, but probably more upsides to work with in other private sector banks like ICICI and Axis.
Any other sort of trends or... because, I mean, there's sort of what you're saying, PSUs, for the PSE index, for example, have you sort of scanned through some of these sectors and how they're poised?
Yeah, the PSE sector is looking quite tired, and it needs a sharp pullback for it to rejuvenate. And the same goes for the other PSU banking index too. It's just mainly SBI. But when it comes to the other names, I have a backup on a tech stock, which is Black Box. It's an IT stock, and if the stock were to close above today's high, I think it has potential to scale all-time highs to about 425. So this is just a backup. I'm not so bullish on the IT names because IT has got limited upsides in my opinion. Somewhere close to about 36,500. So black box is just a backup. 211 stop and objective of 425.
All right. Thank you so much, Jay, for joining in. We'll take your leave for now on the show as we begin to wrap up what was a historic trading session. Once again, today, the Nifty Bank up almost in 4 digits, closing the day with about 900 points of gains. That was really, the story of the day. Financials doing extremely well, and as a result of which, the Nifty hitting a fresh record high as well, closing above 23,700, conquering 23,700 and closing above that for the first time ever. The top gainers, understandably, financials itself. So we had HDFC Bank, which is the top contributor, followed by ICICI Bank, Axis Bank doing extremely well, and then the financials like Shriram Finance and others not doing too badly as well. The second half of trade also saw some gains in the IT pack. So the IT index too ended at the high point of trade, led by gains from names like Wipro and Tech Mahindra itself. On the way down, though, we did see some weakness in names like Eicher Motors, Power Grid, Asian Paints, Tata Steel, BPCL and ONGC. But it was the broader markets which were underperforming today, and we end the day with about 1,300 stocks which are declining versus about 1,100 stocks which are advancing. Prima.
The mid-cap index too ends with a cut of about 0.4%. The Nifty small-cap index managed to close up in the green, but it's a very modest gain of about 0.2%. The big gainers include Amara Raja, 19.5% higher on the back of the lithium-ion technology tie-up. Garden Reach Builders gains for the second day in a row, and big gains coming through, 10% up today. You also had strength in many of the mid-cap banks. So something like a City Union Bank also topped the charts, and PNB Gills in the financial pack also higher. On the way down, Happiest Minds corrected a fair bit on the back of the block deal which took place. Bandhan Bank too down nearly 2%.
Absolutely, and it's a good close. It's a superb close actually on the Nifty and the Nifty Bank. The broader market looking a little down and out, but that's okay. As I said right at the beginning, for a sector which has not done very much to really start to pull its weight, I think it is good news. And of course, it had support in a much lesser sense from the IT services pack as well, where of course people are now starting to focus on earnings, which will be first off the block early July. Well, I think it's a wrap on this edition of Closing Bell from all of us here. Thanks for staying with us all through. Markets Forward is coming up next, and it'll pick up on all the action in just a bit.
But the excitement that I had, and I went with my son to watch a World Cup cricket in New York. And every Indian CEO that I knew was either going to be watching it live or watching it in person.
Either owning a team or at least supporting a friend's team.
And so it's a passion, and I don't know that we have enough of a farm system here, Shireen. I mean, I think if you look at what happened with soccer or football here in this country, Major League Soccer, what happened was you had a great farm system. Yeah. So you had passionate fans, like we have passionate fans in cricket. But the question is, how do you encourage that farm system? And so, whether it's Satya or me, we love cricket and we'll continue to champion and passionate it. We're coming up with our second season of Major League cricket here, and I'm part of the San Francisco Unicorn team, and so it's fun.
So the Hyderabad Mafia is not just taking over tech, it's bringing cricket to the US as well.
I think we'd like to say we're paying it forward, I mean, rather than, in this case, the Mafia. This is all about a passion, and cricket's a global sport. And actually the funny thing about sport just brings together people like no other activity. And, just the amount of excitement, but now we have to go win it all, right? I mean, we've just got to the, Super 8s, and unfortunately, the India-Australia match, I have a board meeting on that day, so it's going to be...
Big conflict.
No, the board meeting is going to take priority, but, I'm going to perhaps sneak a look now and then at what's happening.
I would imagine. The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over
the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Award.
A day of gains on Dalal Street, driving the Nifty to a new record high. It was, of course, led completely by financials. Nifty Bank hits record highs as well. Real estate, metal, oil and gas stocks lag. Mid-caps were a clear underperformer.
ICICI Bank gains more than 2%. The market cap crosses $100 billion.
Amar Raja zooms on inking a licensing deal to make lithium-ion batteries with a foreign company. Craftsman Auto signs an MOU to acquire Sunbeam lightweighters. It propels the stock higher by about 12-13%. Hello and welcome to a fresh new edition of Markets Forward. It's been a spectacular day once again for the market. Yesterday, of course, it was off the lows by 200 points. Today it was 200 points on top of what we had yesterday. We'll, of course, prepare you with everything that you need to know as we come back tomorrow for another trading session. I'm Prashant. With me, my colleague Rima. Rima, hi.
Hi, Prashant. What a fantastic trading session. But in the next 20 minutes, we're going to be with you with all the big news, the key developments in Dalal Street, top corporate voices, the events to track. But first, the market action. A day of milestones, right? So many of them conquered. It started with the Nifty Bank hitting all-time high levels, crossing 52,000. And then in the second half, even our benchmark indices, Nifty Sensex took off, courtesy banks.
All new highs.
Except mid-caps.
Mid-caps, of course. So yeah, I mean, so when the last time you remember the broader market sulking and banks? I mean, we've had days when, this sector or that sector has led gains in a concentrated way. FMCG, for example, right after the budget, the election results is a matter of point. But banks have not really led, and solely so in a long time, and today was that day. So you had, it's a pure financials-led large cap rally. If you look at the top 4 Nifty gainers, it's all not just financials, but private financials. And of course, there was an NBFC, Shriram Finance there amongst the 4 as well. The rest, of course, Axis, HDFC and ICICI Bank. Broader market took a break, largely took a break. Mid-cap index was down about 0.4% or so. Market breadth was negative, not in a very large way, but in a decisive way. And of course, I mean, top performing sectors, momentum sectors like public sector companies, etc., took a bit of a break. There were outperformers there as well. But if you look at the Nifty PSE index, for example, you had about a 0.5% odd cut. And lots of day-on-day reversals. I mean, actually, I was just going through the list. So many stocks which were up 10, 15% yesterday. Names like Root Mobile, Exicom, Bombay Burma. Sharp moves yesterday on the upside. Complete reversals today on the downside. So it's been that kind of a day, but can't take away from the fact that, financials really have done it and pulled their weight once again after last week's sharp 3.5% move. And of course, now the hope is that because there's been so much selling from foreigners who own this sector, and they've been sort of coming back after the election results, the question is there more to go here within banks, which has been the clear laggard in a relative sense? Rima.
Well, month to date, the Nifty is up 5.3% and the banking index is now up 7.3%. So it started that outperformance. But, in a nutshell, if you have to say what the day was like, banks led, IT supported, but the rest of the market was dragging its feet. So whether it's the real estate index, the metal index, PSC index, all these indices ended in the red. The banking index was up 1.7%. IT supported it with a 0.6% gain. But the mid-cap index ends with a gain, a cut of about 0.4% with a negative advance decline ratio. A quick run through of the big winners of the day. On top of the list, at least in the large caps, it's all financial. So Shriram Finance, Axis Bank, ICICI Bank, HDFC Bank, and then you've got a Tech Mahindra in the top 5 gainers list. On the way down, BPCL, Eicher Motors, Power Grid, Tata Steel, Asian Paints, ONGC, these are some stocks which were under pressure. But here's a lineup for what we have for you on our show today. We start with the top movers and shakers of the day. Hormus is with us. The stocks on our radar are banks, ICICI Bank, HDFC Bank, Happiest Minds and Amara Raja. We'll get you the key reasons for that. And CNBC TV18's popular segment, D-Street Chatter on the show, Nimesh joins in to tell us why Welspun Corp was buzzing today. And finally, we prepare you for tomorrow's trading session with the key market events to watch. But top of the show, as always, it's Hormus with the top movers and shakers. Hormus.
Well, if the Nifty is at newer highs, it owes a profuse thanks to the banking stocks that have led the index higher in today's session. As you guys were just highlighting, it was banks and financials all the way. And that, of course, stands out as the sector of today's session. HDFC Bank, the biggest contributor to the Nifty upside today. ICICI Bank, a $100 billion market cap landmark achieved in today's trading session, almost at 1200 now. Axis Bank, SBI, Kotak, all of them having a very good day in today's trading session. On the flip side, what did not have a very good day, and this was even before the market picked up pace in the second half, real estate. And that was a sector that was sulking all through the day in today's trading session. Macrotech, Oberoi, Prestige, all of them seeing losses of anywhere between 3 to 4%. Brigade, DLF seeing some bit of recovery from the lows of the day, but still facing losses of at least 2%. Holding company stocks, they were the ones that were up at least 20% in yesterday's trading session, and they also saw a bit of a reversal in today's session, be it Bombay Burma, Vardhaman Holdings, Summit Securities, all of them 3.5 to 5% lower. Bajaj Holdings, Pilani also seeing some bit of losses. And lastly, of course, undoubtedly the stock of the day, Amara Raja Batteries, 19% higher at 1650, a record high, up 100% already in 2024, and this is the best calendar year performance that the stock has seen since 2014, which is when the stock had risen almost 144%. So a day that belongs to the banking stocks, but can't say the same for the broader markets. Back to you.
All right, Hormus, thanks very much for that. So that's a nice comprehensive wrap of all the action, up and down, but mostly up, at least for large caps. Jay Bala of Cash the Chaos is with us. Siddharth Khemka of Motilal Oswal Financial Services is also joining in. Gentlemen, good to have both of you here. Sid, it's once again, of course, the next earnings season is never far away, actually. You wrap up one and the next one is in plain sight. Today, of course, has been about banks, but it's also at the margin. People are now starting to talk about IT services because that'll be first off the block and whether there can be a surprise there. Just your thoughts on markets as we stand. It's a good day. It's a new record highs as we were discussing earlier. So your thoughts on what you saw in terms of price action today.
Yeah, good afternoon, Prashant. So especially for the year-end numbers results, we have a 2-month window and hence we are never far from a result season. Last quarter numbers were pretty good. Overall FY24, we closed with Nifty earnings of more than 20%, and on a high base for FY25, we are expecting a 15 to 16% earnings growth for the full year in FY25. And largely these earnings growth would be driven by a few sectors. The first of which continues to be the financials, followed by auto, metals, and some steady performance from pharma and FMCG space. Coming to overall view on the market, we feel that yes, after the initial hiccup around the election outcome, now the street is pretty much hopeful or optimistic about the growth-focused budget that in a way would lead to a policy continuity from the previous budgets that have been presented. And with the government having a lot of focus around the developed Bharat or the Viksit Bharat status by FY47, we are expecting a lot of long-term visionary statements, policies that could be announced in the budget, especially with regards to the long-term capacity creation, which continues to be focused on the capex theme. So having said that, I think there will be some sector rotation for the markets to go up from here. The banking sector has to support, which is one of the biggest components, and with a steady earnings and some kind of consolidation in some of the private banks, I think now they are primed to see some upside and momentum with the sector rotation also coming into play.
Jay, if one has to buy one financial stock, which one would you recommend?
That will be Axis Bank for me, and that's because it's got unfinished upsides to work with, and probably the strongest within the financial space. Yeah, it's the HDFC Bank that's driving the sentiment for the whole market, but probably Axis, in my opinion, has got more upside to work with compared to HDFC Bank.
In terms of stance, while trading, Jay, what would you recommend to those who are watching overall?
Yeah, to me, the theme seems to be a green energy theme or ESG theme. So I have Borosil Renewables from the space and also Electra Green Technology. These seems like a good pick at current levels. Borosil Renewables probably has got upside potential to probably scale all-time highs to about 830 plus. And Electra Green Technology, not comparatively as strong as Borosil, but it's got a long-term trend that is driving it. So probably that will give the tailwind. Stops are about 1660 for Electra Green Tech and potential to touch about 2300. But I must add that you need to scale down your positions even in these outside the mainline indices. Everything is getting quite long in the tooth. So position sizing is absolutely important.
Okay. Let's get to the big story of the day, and that's financials leading from the front. ICICI Bank today has hit a market capitalization of over $100 billion. HDFC Bank was also a big mover. Brokerage firm Bernstein has come out with a bullish note on HDFC Bank. Abhishek joins in. Abhishek?
Well, ICICI Bank becomes the 5th listed entity in India to cross the $100 billion market cap. So it's after Reliance Industries, TCS, HDFC Bank, Bharti Airtel. Now ICICI joins in this group. Market cap trend of ICICI Bank, if you take a look, 7th of July 2007, they had hit a market cap of $25 billion. On 31st December 2020, they had hit a market cap of $50 billion. In that same calendar year, they had raised funds, and that's helped in market cap as well. 25th October 2021, they had hit a market cap of $75 billion. So in 2021, it was the highest or the fastest market cap movement that you have seen with respect to $25 billion movement in market cap. And as of today, they have crossed the $100 billion market cap. Now for HDFC Bank, Bernstein has come out with a note wherein they have an outperforming rating with a target price of 2,100 per share. They say that over the next few years, they expect return on asset, that is ROA, of the bank to improve on account of the following. Loan growth will be led by high yielding segment, and that will aid an ROA improvement of 20 basis points over the next few fiscal. Cost of funds will start to normalize, so they expect cost of funds to decline by 18 basis points over the next few years, which will drive the ROA by 11 basis points in the coming years. And optimization with respect to operating leverage. Now, over the last few years, HDFC Bank has been growing with respect to the branch expansion. So that will start to taper down and will help in controlling their cost to income ratio, and that will further drive the ROA by 10 to 11 basis points as per Bernstein. Back to you.
Thank you very much for that. HDFC Bank, even after a 12% gain this month, is still flat on a year-to-date basis, and in the last 1 year, it's been a meager return of about 4%. Happiest Minds is the other one. That stock ended with a cut of 9.5% after a very large block deal amounting to 8.3% equity, or a little more than 1,000 crore rupees, took place in the morning. We learned from sources that the promoter, Ashok Soota, who has a 50% holding in the company, is likely to sell about a 6% stake via a block deal. But the amount which transpired was about 8.3%. Now, Mr. Soota is, an IT veteran. This is not the first, and he's a fairly aged person. And it's not the first time that he sold stake in Happiest Minds. In September of 2023, he had sold a 1.1% stake in the company to fund his other ventures, largely philanthropic. And at that time, he had said his holding, which was down to 50%, will not drop below 40%. But even after accounting for today's block deal, it's still above 40%. The question is, does that stance change? Is he open to selling more stake in Happiest Minds? But the pressure of that large deal sent the stock ending lower by close to about 9%.
The stock's not done very much, right? I mean, since 2021, I think June of 2000, basically with prices similar to where it was June of 2021, almost 3 years now. So yeah, I mean, we'll talk more about this. Where the management, by the way, recently joined us, and they talked about growth projections, etc. But as Rima said, the thing to watch, of course, is what happens with his stake. Will more supply come into the market going forward? And this is it. We'll, of course, try and quiz the management on that. Now, Amar Raja shares gained 18%. I mean, that was a big move right from the word go, right out of the gates at 9:15 in the morning. And this, of course, was, after its wholly owned subsidiary, Amar Raja Advanced Cell Technology, signing a technical licensing agreement with, a Slovakian company, GIB, Energix, for lithium-ion cell batteries. The stock is, remember, trading at a record high. It has gained in 5 out of the last 6 trading sessions. The stock has also doubled in 2024. And this is the best calendar year performance for Amar Raja since 2014. And back then, in that year, the stock was up 144%. Remember, I mean, Exide has been the big winner. But Amar Raja, with its technology tie-up, is now kind of trying to close the gap, at least in terms of the share price performance. Amar Raja also trades at a significant discount to what Exide now trades at on a 1-year forward basis.
Okay, the other big story is that the government is considering a review of the public sector enterprise policy. The policy was notified in 2021 and it spelled out privatization roadmap. Now, sources say the government may consider selling land parcels and monetize select assets, but it's likely to pull back on privatization due to lack of political will. Timsy is joining in with the details from what she's picked up on what the government is planning. Timsy.
Well, as you rightly mentioned, sources are indicating to CNBC-TV18 that the government is mulling a review of the public sector enterprise policy, which spelled out the privatization roadmap. Remember, this policy was notified on 4th of February 2021 during the Atmanirbhar Bharat package. And now what sources indicate is that the review is likely to include revisiting sales of public sector enterprises. Under the policy, government may also consider just selling land parcels, monetization of select assets, but it may decide to pull back on privatization. And this coming on the back of the fact that the political will is not in favor of exiting the family jewels. No decision, however, has been taken as yet, or to be precise, no decision yet on finalizing a review of the PSE policy. But just to remind our viewers, government has already called off the strategic sale of BPCL. The scope of PSE policy was to exit CPSEs, public sector banks, public sector insurance companies. The policy did not apply to certain classes of public sector entities. The policy was divided into strategic and non-strategic sectors. Under the strategic sectors, where government decided to have bare minimum presence, were atomic energy, telecom, space, defense, transport, power, petroleum, coal and minerals, banking, insurance and financial institutions, whereas on the non-strategic sector side, the policy was to consider for privatization. So let's see what sort of a review happens, whether it happens or not, and what is the shape that it takes finally. That's something that we'll have to wait and watch for.
Absolutely, Timsy. Thanks very much for that. Sid, people are waiting for the budget, of course, for the first signs of what the government will do, right? You kind of alluded to some of it. But if you heard Timsy talk about the divestment agenda, the review, and perhaps the disinvestment, some of the disinvestment earlier thought about disinvestment being kept on the side. Any thoughts at all, Sid, what it means from a market perspective?
Yeah, Prashant, I think if some of these stock names which were the market was expecting a divestment, and based on that there was certain momentum in those stocks, I think that will definitely take a backseat. But some of the oil PSU companies, they have definitely seen a sharp improvement in the core business fundamentals with the subsidies going away and crude oil prices remaining stable. We see a lot of interest, at least in the oil PSUs. We feel that the space, the oil and gas PSUs, especially, we are expecting an upcycle in the oil and gas space, both upstream, downstream, and some of the gas companies. So, for example, we are positive on both ONGC and Oil India. From the oil marketing companies, we are positive on Indian Oil, HPCL, BPCL, and from the gas space, we are positive on GAIL, which is Gas Authority. So I think the entire oil and gas space, irrespective of the divestment, and we have seen in the past few years that while the budget numbers for divestments have been much higher, the actual divestment numbers have been much lower. And this year, especially with the high RBI dividend, that gives a lot of room for the government to not depend on some of these strategic divestments. So let's see and how the government makes this policy. But I think in the long term, this would be beneficial for some of the PSUs, public sector enterprises, as it will give more freedom for them to operate in their respective space, especially some of them are in the core industrial space, which we expect to do well.
Got it. Jay, quickly, you started by Electra and Borosil Renewable, right? You said renewables. We just highlighted Amar Raja was a big mover. That's also, you can kind of sort of count in that big umbrella basket, right? Renewables, or, I mean, at least the bet is batteries for EVs. How are these looking, Amar Raja and Exide?
Yeah, both these stocks looks like they're coming to an exhaustion point. In fact, Exide in particular in today's price actually looks a bit shaky. I was watching International as the next probable mover, but I was anticipating a breakout to come through. The early session was promising, but towards the close, it didn't finish well. So, but it still remains on the watch. So the next stock, if it were to move, it'll probably be International.
All right, fair enough. Got that, Jay. Thanks very much, Sid. Good to speak with you, as always, here on this program. But let's quickly take you through, the corporate corner, key takeaways from some of the companies that we had on the program today. Shriram Finance, of course, has been a spectacular mover, and it's almost now 3,000 rupees, the share price. No slowdown in commercial vehicle financing is essentially the message which came through from the chat we had earlier today. They're expecting CV demand to increase in states like Andhra Pradesh. The management told us that commercial vehicle financing has been good in the month of June so far, after a bit of a slowdown that they saw in that space, and that's the majority segment for them in April. They added that there is really no stress in financing, especially in rural areas. Some of the growth drivers, growth areas for Shriram Finance have been gold and MSME, and they're expecting continued 20% kind of growth in the medium term there.
The IPO of Allied Blenders and Distillers opened today, and it will close on the 27th of June. The issue size is 1,500 crore rupees, which includes an offer for sale of 500 crore rupees. The management told CNBC-TV18 the IPO proceeds will be used to repay debt, added that the finance cost will reduce substantially after that, and they're targeting 5,000 to 5,000 crore of revenues with mid-teen margins in the next 3 years.
Okay, well, that's the IPO, which, of course, is seeing a fair bit of activity and action. We'll take a quick commercial break here. We come back with our popular segment, D Street Chatter. Nimesh will be with us to take us through that. And, of course, what to watch out for in terms of events as we come back tomorrow. That's coming up. Stay with us.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Way to celebrate our own 25th year. with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain.
Welcome back. It's time now for our segment D Street Chatter. Nimesh is joining in with all the buzz from Dalal Street. Nimesh.
I remind it was a strong day for the market, record highs towards the end, and a big move in the financial stocks on the eve of the Fin Nifty expiry. But there were a lot of movers in the mid-cap and broader market stocks as well. The first stock is Welspun Corp. Big move in that stock and on large volumes as well. I understand for the last couple of days, some domestic mutual funds were seller. Today was a clean-out trade, a leading long-only fund, and some large family offices were big buyers, and that's where the big move there. The second stock is Apollo Tyres. From days low to days high, there was a big move on that stock as well, backed by FII buying. I understand the street is now anticipating some price hikes as well from the industry players very soon. The third stock is Inox Green. Even that was buzzing into it on large volumes. All eyes will be on the fundraising tomorrow. I understand some large market investors, including the promoters, are likely to invest via pref and some QIP as well. And the last is some large blocks in some mid-cap names. Tilaknagar Industries, Dhani Services, RK Forging, Elchem Labs all saw block deals between 1 to 2%. And in few instances, I understand the promoter entity was a seller, so the disclosures could be quite interesting in all those mid-cap names.
Okay, all right. Thanks very much, Nimesh, for that. So those are individual names coming through from D Street Chatter. As we sort of come back tomorrow, what are the events to watch? Vamakshi is standing by with that list. Vamakshi, over to you.
Well, absolutely. Let me first start off with the global cues to watch out for. The Fed will be presenting the annual bank stress test results tomorrow. Apart from that, Nvidia's annual shareholder meeting is expected, and therefore we will be watching out for that counter as well. But back home, stock-specific action